So today in this video, we are going to break it down. We're going to break down everything that I've spoken about in the last two videos, just to reiterate again about what I do and what you can do if you choose to get involved in trading and trading in markets, because markets are cyclical by nature. Money moves in and out of markets. There's different context for different markets, and there's different times, or there's certain times where you should be touching a market, and there's certain times where you shouldn't really be touching a market. So that's one thing I'll have to say at the beginning of this video, is that I don't want you guys to really fixate on forex, crypto, stocks, indices, um, gold, silver. I think I said commodities, or maybe I didn't say commodities, but I don't want you to fixate on a certain asset class. Yes, as a beginner, you can trade certain asset classes just to get the feel of trading. However, I want you guys to actually fixate more about price action rather than the actual thing you're trading, because markets behave the same way, whether if it's forex pairs, whether if it's a market that shows the price of 2 minute noodles or the price of water bottles. It's the same. So we're gonna break it down. We're gonna break down a lot of things. Everything that I'm gonna speak about in this video, I'm just repeating myself over and over again. And if you're watching this, and if you've heard me say this multiple times on other videos, then good. That means you're doing something. And if you've applied this towards your trading, if you are trading and you are seeing something but not necessarily seeing profitability, because obviously that's going to take a long time. It could take you weeks, months, years, but it just depends on how many how many times you show up to a chart. And it depends also if you actually see what I've told you about, and if you actually can gauge context, and if you can actually understand that when you get involved or when you don't get involved. Hopefully you guys could actually get that. So if you're that person, then I'm glad. But then if you don't know what I'm talking about in this video, then you need to get on that account and you need to watch these videos, so then you can actually understand what I'm talking about, because I'm going to be speaking in this video as if you guys already know what I'm talking about from the blueprint and from the jigsaw and from other videos I've made on the YouTube channel. So I'm going to assume that you guys know what I'm talking about, and if you don't, go watch the other videos. They there. I didn't record a video for you guys to then ask me, what's this that, when everything is there. You can still ask me about concepts and stuff, but I've made videos, guys. Like, I've literally made videos about explaining what I've seen and what you can use. So if you're confused about anything that I say in this video, just go back to the previous ones. Okay, so today we're gonna break something down. I'm just gonna go on the MintFX website. I'm not gonna really explain what I'm gonna do. I'm just gonna do it, and then you'll probably understand what I'm doing. So we're gonna go in the sentiment viewer. This is kind of like what I do. So I'm gonna go find a asset or a symbol to get some context, and I'm probably gonna open the FX book one to also do the same thing. Someone actually asked me what would I have done if I did not have these in my arsenal. I probably would have gone on a certain charts, and I would have had to do the long approach. Probably look at every single chart until I find context. So what I mean by that is that I would probably go on in any instrument. Let's just say, for example, any forex pairs or any indices, but just any instrument, and I would have done some analysis on one time frame, and I would have went on multiple time frames to validate that analysis. So what I mean by that, what analysis that I would have found is looking for reaccumulation models, looking for supply and demand zones, seeing if those supply and demand zones hold, and if they hold, then that means that they're valid, and if they're not holding, then they're invalid. And I would do that on multiple time frames until I get a context. So what I'm saying is that I would look for structure on one time frame and look for the same structure on multiple time frames if I didn't have this sentiment outlook. What that does when you're manually looking for structure on different time frames is inevitably, and I don't know what if you guys can see what I did there, you are gauging context, because when you're seeing the same thing on different time frames, you are your own institutional sentiment or your own community trend sentiment. You are your own sentiment. So you could probably do it that route. But I mean, this is available to me through MintFX. Shout out to MintFX. Um, it's kind of like, if you had the choice of walking to your local Checkers or Pick and Pay or Woolworths, would you walk to the store, or would you take an Uber there? Obviously you would take an Uber there. Some of you guys might have your own cars and stuff, but for the sake of the example, you're choosing the Uber, right? Because you can walk there, because some of you guys might live close to shopping malls. Like some of you guys might live in Four Ways Mall, Danefern Square, Santon City Mall, Mall of Africa, Menlyn, Gateway in Durban, or Bay West, or Warmer Park in PE. It really doesn't matter. But it's about convenience. It's about, what's comfortable and what will make your life easier, type of thing. So it's available to me and I'm going to use it. But that's probably what I would have done if I didn't have this. So let's just go look for a market that has the criteria which I've mentioned in this blueprint video. Again, from now on, I'm just going to speak like as if you guys know what I'm talking about. So go watch the previous video. So I'm going to look for a market that has about a 70 to 80% on the intraday, whether bearish or bullish, and about a 55% on the daily, whether bearish or bullish. So either or. So I want to see something that's like majority bearish or bullish, and then see the same thing on the other side, and then we will go from there. So let's just go find something. All right, so I found the Australian dollar and the New Zealand dollar. I mean, I just saw this straight away, and 67%. Okay, so this one fits the criteria. So let's just go look for other ones. Bitcoin, BTC, USD. So Bitcoin, the cryptocurrency. So 70% bullish, and then 91% bullish. So this one is really, really bullish. That fits the criteria. So we have 1, 2 that fit the criteria. So this one's bearish, that one's bullish. Let's see if we can find any other ones. And by the way, the intraday, it changes quite a lot. So today's Wednesday. So if I look at it tomorrow on Thursday at around this time, it'll probably be different. But trends sustain themselves. So this might flip to a bullish the next day, but it doesn't mean that the overall asset is gonna go in that direction. It just might mean for that specific time it made a bullish run, but the overall trend is that it's going bearish. And that's the one thing that I like to use this for, is to see that cloud of liquidity being engineered. Is because everyone still sells and buys in areas where they're not supposed to be selling and buying in, and that's what ultimately engineers true liquidity within a market. So that's why I use this one, because this one generally contradicts the MintFX sentiment outlook, and that's when you can actually see, okay, where the market and where price wants to go. You don't know how it's gonna go there, but you already know that price wants to do this. So yeah, and that is provided that I'm not trading it, because I'm just establishing a context first. So I've identified 2 markets that have that. So this one's bearish, that one's bullish. So that one is 70%, this one's 91%. So let's just go see if we can find any others. I mean, 78%. I mean, yeah, 53%. I mean, you could. I mean, I said 55%, but I mean 2% off. I mean, yeah, you could count the euro and the Kiwi as being bearish. So you could look at that one for bearishness. But however, I would probably step back away from that one. So yeah, this one's perfect. I mean, 55% and then 79%. So even though it's quite similar to this one that I said I would step back from, I probably should step back from this one, because I mean, this one's like 2% more bearish than this one. But you can understand what I mean, guys. Like, it doesn't mean that I won't choose this, but there's 1, 2, 3. There's 1, 2, 3, 4 markets that I've identified where there's some trend happening, and then about 3 of those markets are bearish, and then 1 of them is bullish. So let's just go see if we can find any other ones. So let's see. This one, German 30. So this is an indice. German 30 fits that description. 78% and 55%. So I'm just gonna go and pick a market. Let's just go and pick. Why don't I just pick something that's, I don't know. Let's pick anything. I've let's pick that. Let's pick the British pound and the Australian dollar. I've never seen that asset before. So let's go do that one. Let's go do that one. So I'm doing the British pound and the Australian dollar because I don't know. I just decided to pick that one. Fine. Let's just go find bearishness in this one, and let's just see if we can do that. So British pound, GBP, Australian dollar. Let's just see if we can find it there, and let's just open the charts. Okay, cool. All right. So, okay, without even looking at the sentiment indicator that I have on, or the structure, indicator that I have on, you can already see that price is going down. Generally speaking, you can see there's like a downward, trend on the 30-minute time frame. So, let's just turn this thing off. Like, you can see price is going down, but I'm gonna turn this thing on. So I've done that, right? So I went on this website, I chose this one, and let me go and find the same on this one, and let's just see if we can find a, I wonder if they do have it, and if they don't have it, then it's fine. Oh, okay, there it is. Oh, perfect. It is relatively bullish. So the community trend is 77% long and 23% short. So can you see how they are the opposite? So here it's short, but over here it's long. So you can already see there is a cloud of liquidity that is going to be engineered beneath the price. But that does not mean that I'm selling already. We still have to look for good areas and good context to look for that bearishness. But you can already see why the trend is sustaining itself. It's because people are thinking that, the price is going so low that now it's time to buy, when markets don't function like that, So let's just go and, I don't know what I'm doing now. So let's just go and do what I normally do. So a higher time frame analysis, the 30-minute time frame, that's my higher time frame, and then the time frame entry is going to be the 1 minute. And there's something that I'm going to introduce to you today, which is relatively new. So the 1 minute is going to be the time of entry, and I've always said that if you're entering on a time frame, you have to do your analysis on a time frame that's 30 times higher than the time frame that you're entering. So in this case, it's going to be the 30-minute time frame where we're going to do our analysis on. And then to validate supply and demand zones, you must go 4 times higher than the time frame that you're entering. So we'll go to the 4-minute time frame, but there's no 4-minute time frame on TradingView. There is on MetaTrader. I think there is on MetaTrader. If I open up MetaTrader, I think there is a 4-minute time frame on this one. Is there? Let me check. There should be. Well, I know there is if you open it on the phone, but anyway, we're not using MetaTrader, we're using TradingView. But I'm just gonna use the 5 minutes, as my time frame to validate this. But we're not gonna go there now. So let's just see what we can find. I mean, quickly you can already see that it's bearish. It's already bearish on British pound, Australian dollar. I'm trying to remove all of this. If I can only just delete all this shit, but anyway, I'll probably just leave it there. It's fine. But you can already see the structure of the market. It's bearish, and in fact, let me just delete all of this. It's fine. You guys can watch me do whatever I want to. This is live. We don't do things perfectly on here. This is not that YouTube channel. This is actually not that. I'm not that guy who wants to make things picture perfect. Let's just delete all of the stuff. I could have done it the easy way, but who cares? I don't care. So, yeah. So you can already see that there's bearishness. The most recent price action is this indicator showing that there's a staircase, which is indicating protected highs, as you can see over here. Protected highs. So this obviously means, there's this bearishness over there. and it's been in a downtrend for about 2-3 days now. So you can already see the bearishness is established, and if you want to, you can look for supply zones. So there's a supply zone over here. In fact, this is probably not a valid one, but there's supply probably over here. I don't really like to draw supply on this one, but you can say there's a supply zone over there. I think I'll draw that one, but this one probably got mitigated by this upward movement of this candle over here, but it's a supply zone nonetheless. Yeah, so we've kind of established bearishness within this asset on looking on the 30 minutes. Now let's go to the 5 minutes, because that's the time frame that I'm going to be looking at to validate this. And as you can see, the 5 minutes is validating that sentiment of bearishness. Why? Again, the indicator is indicating staircases which are decreasing, which is showing you protected highs. And what happened is that there is a bearish range where price is at the bottom of the range, which is indicating to you that the price wants to go short on the 5 minutes. So if we go on the time frame of entry, which is the 1 minute, it's not in lining with what we have established on the 30 minutes and on the 5 minutes. It's showing bullishness. It's the most recent price action is, increasing. There was a breakdown and then increasing. So there's no bullish or there's no bearishness, on the 1 minute. So this is when you would probably wait or step back away from this asset and wait for that bearishness to come. So you'll probably want to see something where price would want to put in some sort of indication, or you want to see the indicator making those staircases to the downside, those increasing protected highs, but it's not showing that. So that's when you'd probably step back from this asset and you'd wait for that bearishness. You'd wait for this sentiment to be supported, because everyone right now is looking to go long on this. But what structure has shown us from looking at the 30 minutes and looking at the 5 minutes, it's shown us that there is some bearishness, and the 5 minutes and the 30 minutes are in synchronous. I'm not sure if that's even a word, but they are agreeing with each other. But the 1 minute is not agreeing with the 5 minutes and the 30 minutes. So one thing that you'd want to see is you would go on the 1 minute and you'd use the 5 minutes to validate what's happening on the 1 minute. But in this case, we did it the other way around. We went on the 5 minutes and then the 1 minute. But we can use multiple time frames if you want to. Like, we could go maybe on the 15 minutes and we could see what the chart looks like. And if you actually look at the 15 minutes, it's in tandem or in synchronous with the 30 minutes, which is showing the most recent price action is those increasing staircases, which is showing protected highs. So the 30 minute is showing that, the 50-minute time frame is showing that, the 5 minutes is showing that. It's showing also the price being at the bottom of the range, because I don't know if you can see, like, this whole square over here with this line, this is a range. Like, this whole thing that the indicator is showing to you is a range. In this case, the price was in the middle of the range, so you wouldn't really be looking to get involved. But I don't know if you guys can see, like, this is a range over here as well, and the price is actually near the bottom of this range. So that supports that bearish sentiment. And this, what I would refer to, this whole thing, what I would refer to is a stage one. So markets obviously move in stage one. I don't want to draw a lot because then I'd have to be rubbing out again. But markets move in stage one and stage two. So stage one is the consolidating phase. It's when there's like supply and demand zones that are being invalidated. So there's no trend that's being set. So stage one is the consolidation phase. Stage two is the trending phase. So what would happen is that we would want to see that stage two being played out. So this whole area over here is stage one. And since the market has broken short in this pair, we would want to see a stage two. So we'd want to see that bearish trend. and the stage two is where you should be getting involved in, and that's also how that's basically how markets move, guys. So anyway, that's what I was speaking about, a range. So that's one thing I wanted to mention. So we've seen something on the 30 minutes, and we've seen something on the 50 minutes, we've seen something on the 5 minutes, and that's something that we've seen on 3 times frames. They are in synchronous with each other, they agree with each other, but the 1 minute fails to agree with the 3 time frames we've just looked at. So that's when you would wait, or you would probably walk away from this market and wait for that bullishness to, or the bearishness, sorry, to enter. Can do it on another chart. I mean, let's go and look at that other one that we saw. So that Australian and the Australian dollar and the New Zealand dollar. Let's go look at that one. I already have it on my watch list. Okay, that's okay. So let's go in the 30-minute again. Let's try and find what is it indicating. Let's try and find bearishness. So again, we want to see redistribution models. We want to see supply zones because we're trying to look for bearishness. So at the moment, there's no bearishness that is being shown on a 30-minute time frame. There was breaks up. It was going up. It was a breakdown of here where it went up. It broke down. Sorry, it went up, increasing protected lows, and then it broke down a couple of times. It broke down, and then there was a range that was created. So there is this, we can assume on stage one, on 30-minute time frame, that this is a stage one of what is happening on this asset. There's no trend being set, so we could go lower and see if we can find the same thing. The most recent price action on the 15-minute is now price making protected highs, but this one is quite choppy. It's not really that clean, but the most recent price action is it's starting to put in a bearish move down, but the 30-minute is not really doing that. There was a breakdown, but I want to see that clear breakdown, this indicator indicating increasing protected highs. The 15-minute is showing that, but the 30-minute is not showing that. And the 5-minute, let's see what the 5-minute is showing. The 5 minutes is clearly showing that. So the 15-minute, and then there was a breakup over here, and that's when you would assume redistribution on the 5 minutes. So this asset is in a redistribution phase on the 5-minute chart, with the 15-minute showing increasing protected highs, with the 30-minute, which is our high time frame context, which is showing no delivery. It's just showing a stage one. So at the moment, our 5-minute is showing stage two, 15-minute is somewhat showing stage one, and on the 30-minute it's still a stage one. So the 50-minute and the 5-minute are in tandem with each other, but the 30-minute is not agreeing. And if we go down to the 1 minute, you can see that the 1 minute is not agreeing with the 5-minute and the 15-minute. So then again, this is when you would step back from a market and you would actually wait for that bearishness to enter, because now what's happening is that yes, it did put in those protected highs, but it got broken by this recent push, and even this range on the 1 minute time frame, price was not near the bottom, it was in the middle. So it can show you that bearishness was not, is not in this market, which is probably why it's only about 67% bearish, and it's not like 70 to 80+% bearish, even though it's like that on the intraday, but on the daily it's still quite bearish, but not strongly bearish. So notice what I did there. So that's basically what you guys can do to validate, or that's how you would analyze markets and charts. There's many ways to do it, but that's one of the ways that I've just shown you what I do, and you guys can do the same thing. And that's how you gauge context, and that's when okay, you can make a informed decision of whether to get involved or whether to step back. So yeah, hopefully this makes sense. So yeah.